So in this slide, it shows the graph of the distribution of Benford's law leading digit for the first digit. We had mentioned in an earlier slide that the leading digit 1 would be distributed about 30% of time over the entire data set, dropping down to 4.6% with the leading digit 9. So this is the expected distribution for the first digit of Benford's law. Next slide, please. Actually, next slide. So conforming data types, the data set must be described of similar data. That is, they should be all the same, regardless whether it's town populations or all the transactions in the general ledger, all the transaction in accounts payable, or even the cubic meters of water in all the lakes in Africa. Those are conforming Benford's law data. You should have large data sets. Even though Benford's law may work for smaller data sets, it is much more accurate with larger data sets. The data should be spread, that is, have a wide variety of numbers, and there should be no artificial built-in maximum or minimum values, because artificial values would then skew the results differently. Now, some common characteristics of accounting data in the next slide. These are a list of conforming data types, so you can apply Benford's law to these examples to check for whether it conforms or not. And if it doesn't conform, there might be some opportunities to look for anomalies and do additional tests. But you can also, along with these lists of obvious direct usage of Benford's law, you can look for some indirect usage too. As an example, money laundering. Money laundering flows money into the revenue stream that's not generated by regular business. Since paying income taxes on false revenue is not desirable, corresponding expenses are usually made up to offset the false revenue. And if there's enough of these made-up expense numbers, Benford's law may detect the anomalies. Next slide, please. Non-conforming data types, whether the data are predefined, assigned, or have artificial limits, these will normally not conform to Benford's law, and it's not useful to apply Benford's law to items such as telephone numbers, zip code, postal codes, and any made-up numbers or sequential numbers like insurance policies or invoice numbers. The aggregate data, again, you need individual data in order to apply to Benford's law to work. Aggregated data is grouping the data together, and group data individually when applied to Benford's law is not the best. And data sets should, with 500 or fewer transactions, makes the usage of Benford's law a little bit awkward, although the first digit test may work for as few a transaction as 300, but it's not very reliable. And of course, if there's no transaction recorded, you cannot apply Benford's law on nothing that's recorded. Next slide. Benford's law can be used in anti-fraud programs, and they can be running from risk assessment. Next slide. Next. They could run from risk assessment all the way to monitoring. We'll talk about continuous monitoring a little bit later on. For high-level usage of Benford's law, you can see in this particular example, the data is in red on the graph on the right-hand side, and the expected distribution of Benford's law is blue. So in this particular example, there are 10,000 vendor invoices, and the first leading digit of 3 does not comply to Benford's law. So there's an anomaly here. You can see that in the chart on the left-hand side that the leading digit 3 is expected to be about 12.5% of the time, but in fact in the data it comes out as 26%. So if you were to look at that anomaly, instead of looking at or auditing 10,000 vendor invoices, 26% of 10,000 would be 2,600 invoices that you would have to look at, all starting with the leading digit 3. Next slide. It can be used for forensic audits, and I believe that Rohit's going to be giving you a demo specifically on permission limits. You could use it to audit financial statements, not the statements itself, but the numbers, the data on how the numbers are derived. So you could check various accounts, whether it's a cash on hand or whatever. The corporate finance and company evaluation, examining cash flow forecasts. Some people would say cash flows and forecasts, they're all made up numbers anyway, so Benford's law would always show nonconformity. So major digit tests using IDEA. The first 4 tests listed here are primary Benford's law tests. That is, first digit test, second digit test, first 2 digits, first 3 digits. Now there's also advanced Benford's law tests, and they're called summation and second order. There's also associated tests that are the last 2 digits, number duplication, and distortion factor model. All but the number duplication and distortion factor model can be automatically executed from within the IDEA software. Next slide, please. Now we're going to talk a little bit about the first digit test and the second digit test. They're both very high level tests. These 2 tests will give you a good initial overview of your data. But remember, these are just basic overview. And we'll talk in the next slide about the first 2 digit test. This is more focused, and it would examine the frequency of the numbers of the first 2 digits. So in other words, it'll look at not just the first leading digit 1, but 1 in association with another digit like 1, 1, 1, 2, 1, 3, and so on. It can be used to select audit targets for preliminary review. You won't have to look at 2,600 invoices, as we mentioned in the previous example of 10,000 invoices, by using the first digit only. So here in the chart on the right-hand side, you can see the second digit of 1, that is 3-1, has a 1.78% in the data set, whereas expected Benford's law only expected it to be 1.38%. And the other second digit of 3, in other words 3-3, has in the data set 1.69%. So when you take those 2 percentages for 3-1 and 3-2 and add it together, multiply by the 10,000 records or invoices you have, it results in 347 invoices that you would only have to audit now instead of 2,600. Now what you may also wish to do is that you may want to summarize, say, the first 2 digits of 3-1 and then maybe later 3-3 by the amount, and see how many unique numbers there are. So for instance, after doing that, you might see that, say, $31.99 occur very, very frequently. But you know that this amount is the most popular item that's sold. So you can actually eliminate 31, the leading 2 digits, 3-1, as an anomaly. It's not an issue because you identify what the problem was, and therefore you would have 178 fewer invoices to review. In the next slide, we talk about the first 3 digits test. It's more focused, and it uses the same theory as the first 2 digit test that we just talked about. And it tends to, the first 3 digit test tends to identify number duplication. In the next slide, the last 2 digit test, it's used to identify round numbers usually. Now, it takes the most right side 2 digits and calculate the distribution. In the graph, the distribution is expected to be flat, or the horizontal red line that you see. And this is from a accounts payable file that had several million records. But in real life, you can see that the last 2 digits of 00, they would occur very, very frequently. And as this is an accounts payable file, there's a number of payments that ends in even last 2 digits, no pennies. Also in real life, 50, the last 2 digits of 50 tend to occur more frequently. And if this was a sales file, you'll probably see the last 2 digit 99 being occurring much more frequently also, because of a lot of items are sold like $1.99, $5.99, $10.99, etc. Practical applications for this could include inventory count, weight of fishery catches where there's a quota limit applies, a vehicle odometer reading associated with warranty work, or can even apply to royalties or percentage of where there's a percentage on sales or usage. In the next slide, we're talking about the second order test, and it's also based on the first 2 digits in the data, but the numeric field is sorted from the smallest to largest number, and the difference between each pair of consecutive records are used to apply for the graph. Now, normally you would see that numbers with even tens, like 10, 20, 30s, 40s, and so on to 90, on their own, they're expected to conform to Benford's law distribution. And the rest of the numbers that are not even tens, on their own, will follow a Benford's distribution, as you see in this graph. This is also this is the same accounts payable file with several million records. So this test actually is particularly useful in indicating data integrity issues.